The European currency extended losses against the US dollar as expected. After reassessing statistics released last Friday, investors began to get rid of risky assets on expectations that the Fed would keep raising interest rates amid the strong labor market. Today, the focus of traders will be on US inflation data. A rise in consumer prices could lead to a continued rally in the greenback against the euro and the British pound. As for the latter, the situation is a bit different. Market participants are awaiting the Bank of England meeting and further rate hikes. They hope to receive some clues about the future of monetary policy in the face of Britain's shrinking economy. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes German consumer prices. This data has already been released. Germany's consumer price index increased by 0.4% in April, in line with analysts' estimates. Now, traders will focus on US consumer prices. Annual CPI inflation in the United States is forecast to stay unchanged at 5% in April. April's core CPI is expected to rise by 5.5% in the same period compared to the 5.6% increase recorded in March. On a monthly basis, consumer prices are anticipated to advance by 0.4% in April, much faster than the 0.1% increase a month earlier. Excluding food and energy, the core CPI is forecast to show a 0.4% monthly gain. If inflation figures are below expectations, demand for risky assets is likely to recover. If data exceeds analysts' estimates, the US dollar will continue its bullish run, exerting stronger pressure on both the euro and the pound sterling. Furthermore, traders may take notice of data on the US federal budget balance and Bundesbank board member Joachim Wurmling's speech. However, these events are unlikely to have a severe impact on market sentiment. From a technical point of view, it's worth being guided by the level of 1.0973, which acts as the middle of the channel on the Euro-American dollar chart. A false breakout at this mark will create a sell signal, thus dragging the euro down to 1.0944. Long positions at this level will be relevant only amid a false breakout. If US inflation data proves to be strong, the euro will drop to the next support levels of 1.0911 and 1.0867. At these marks, I recommend going long on a rebound to catch an intraday correction of 25-30 pips. Alternatively, if the price consolidates above 1.0973, the volume of long positions will increase. Thus, the euro will recover to 1.1000. Its breakout is possible only if US consumer prices fall. If so, the European currency will have a chance of approaching 1.1029 and 1.1060. At these levels, it would be a wise decision to sell the pair on a rebound, counting on an intraday correction of 25-30 pips. Short positions at 1.1000 and 1.0973 can be considered only in the event of a false breakout. As for the British pound, a false breakout at 1.2631 will create a sell signal. In this case, the pound-dollar pair will dip to 1.2596. Its breakout will make it possible to add short positions, with the pound sterling sliding to 1.2560 and 1.2521, following data showing still high inflation in the US. In case of a false breakout at 1.2596 or after long positions on a rebound at 1.2560, traders may expect the British pound to rise above 1.2631. If the price stays firm at this level, a buy signal will be generated. Thus, the pound sterling will probably hit a new one-month high at around 1.2663. At this mark, going short will be relevant only amid a false breakout. Short positions on a rebound amid inflation data showing US consumer prices rising less than expected can be opened at 1.2709 with a view to decline of 30-35 pips. Best of luck.